All right, we are back with another episode of the Real Estate Investing Club. Today we have Randy Holland with us from over there in Nashville, Tennessee. Randy has a ton of experience in a lot of different things, but in the real estate side, he's a multifamily syndicator, as well as he's managed property management in the office and retail space, and he is a broker. So Randy has all the experience you could want in real estate. So I'm sure he has a lot of wisdom to impart on us today. Randy, thank you very much for hopping on the show.
Okay, my pleasure. So I'm often, I may have some advice. I'm often wrong, but I'm never in doubt. How's that?
That's that's the way we all like to be, right? All right. I told you right before we got on here, we like to start with stories. So why don't you take us back to the beginning of your story? How'd you get started in real estate?
Yeah, so I ran out of money as a songwriter. That's how I got into it. In 1985, we moved from Nashville to LA. I was an aspiring writer and had a new son. And so Jenny and I had moved, and I was working as a recording engineer some, but trying to write as much as possible. And we just got to the point where we realized I got to do something else. And so it was the family security thing that kind of drove me into it. And I got my license, and I got to start with Marcus and Millichap in 1987 and was rookie of the year that year and had a fabulous run. And yet still, when, I don't know, 96 came around, we realized we had to move back to Nashville because our son was about to be a first grader, and we knew we didn't want to do it in Southern California. So back we came, and having been a realtor, a commercial broker with Marcus Millichap all those years, I was kind of ready to make a break of it. It was, I don't know if you remember much about that time, but we had all lived through the failure of the savings and loans and all that time. So I got into the fitness business. I actually syndicated a business that we ended up running for 15 years, put my kids through school, and it was a great run, but the fitness business was really starting to change. And in 2010,
what kind of fitness business was it?
Yeah. Okay. So fair question. I was really heavily involved in personal training. We had a business where we kind of took over your life for 10 weeks at a time. We had about
like a boot camp kind of thing.
Yeah, we had a 6-month waiting list to get into it. It was fun. But what happened was at the end, by the great financial collapse of 2008, that kind of money to spend became real optional. Yeah. And so we watched, our revenue fall dramatically. And we also saw this new kind of fitness happening, that instead of having one-on-one training, everybody was buying club positions at like
CrossFit,
Orange Theory, or hot yoga or something. It's just an alternative that we couldn't compete with. So we got out in 2012, sold the business, and that's when I got back into real estate. So I took about a 15-year hiatus from it, but boy, I wish I had
perfect time to get back in 2012.
No, it was. But I truly do wish I never got out. If I have a regret, that's probably it. So yeah, that's it.
Nice. Yeah, I love fitness. I don't know if you'd call it a hobby, but it's a thing that I really like to do outside of real estate. And I've always wanted to start a fitness business, but but when I get to the point of thinking I'm actually going to do it, I'm always like, no, just stick to what you're doing. Stick to real estate.
Yeah, just buy your membership and and leave the rest to those that really want it to just have a lifestyle business. Because that's all it can really ever be.
Yeah.
I think.
Yep. So you switched over to real estate, over to real estate in 2012. Were you going into multifamily at that point, or how'd you get started after that?
Well, of course, I'd been around multifamily all those preceding years. When we were in the fitness business and built 4 stores, we started a general contracting business, and that kind of gave us an advantage that we continue to benefit from now, where we, as deal sponsors, and I'm going to this goes into the whole syndication thing, which may or may not be anything we want to try to tackle today. But when you're an asset manager of one of these things, you look for ways to be uniquely qualified to deliver value, right? And so among all the retail asset managers out there and general partners that are syndicating deals, most of them have to go hire a general contractor and pay the rates that they charge. And it is expensive, never so expensive as it is now. Moreover, we have really great offshore relationships with suppliers, and we bring assets in from China and Vietnam and India at about a 30% discount from what we can find here. And so that, with our labor leadership kind of capabilities, we're able to really change what we can get done in terms of unit renovations with less money. And that gives us an advantage to do one of two things: either make more money for the partners, or be able to pay just a little bit more than the other guys. That was what was happening in 2021, right? When everybody was competing over these prices, were getting frothy, and we couldn't really compete. You couldn't end up really paying what it took to get the deal oftentimes. And no, don't get me wrong, we lost a lot of deals because we couldn't get bid up so high, but we really also benefited because we were able to achieve, an IRR that others just couldn't do because they didn't have the advantage with respect to the build out cost.
Yeah. Yeah, that makes a lot of sense. And yeah, in 2020, 2021, those prices were just obscene. I I did buy my best deal during that time, but
did you? That's good for you, man.
Yeah.
We have a deal that we're probably hoping to dispose of soon that we bought in 21, and it might end up being our best deal too. It's a deal in Huntsville, Alabama. So it's always interesting. You just, all the sun and the moon and the stars sometimes have to align for you. And they usually, they don't have to all come together for you to do well, but when they do, boy, it's great.
That's the thing. Like, if I gave any new investor advice on the acquisition side, especially, I would just tell them, like, whenever I put forth effort, I always want to see a return, like immediately. I want to see that 1-to-1 ratio. But acquisitions, I feel like, is the one thing that you can be doing it for a year and not get anything, and then all of a sudden you have this just killer deal come out of nowhere, you didn't expect, and it's just plops right down in your lap. So it's one of those things that you just got to keep going until you find the right thing.
Yeah, there's a lot of friends of mine who are also in this space who started out the year realizing that, oh wow, their lender may require them to buy a rate cap, and that's a $500,000 thing, or $1 million to buy another year of rate cap to keep everybody happy and not retrade the debt. And if you weren't able to do that, you were really hung because they had to sell, and that's a bad situation to get into. It's unfortunate, because the truth about real estate, in particular multifamily real estate, is time really does heal all wounds.
Yeah.
And as long as you can make it to the next interval, you must. I mean, there's no reason, if you're doing a quality job on the asset management, and if you've got a reasonable professional management company, you can withstand the storm, and it's important not to panic.
Yeah. And I feel like that's a message that all seasoned investors like yourself try to convey to people, that if you buy something, hold it. You might be underwater for a second, but if you can hold it until the next, in the next valley up to the next hill, then you're gonna see the return that you were hoping for.
No, that's right. Sell an asset to pay the freight so it can keep going. Do whatever you must, but don't panic.
Yeah.
That's the thing.
Awesome. So you've had experience in pretty much every different business model, that you can in real estate. I mean, you're a broker, you're a property manager, you do syndications. Out of everything that you've done, what has been your favorite method of executing real estate, doing real estate?
Well, I actually really enjoy being a broker, because the negotiation process for me is something that it's kind of a superpower. And at least that's what my family and colleagues tell me, is I really enjoy, and I don't panic, and I don't get, it's just, it's reps. I've done so many reps and transactions that it makes me calm and what's the word, Jenny? Creative. Yeah. So yeah, sorry, I'm getting some help from the gallery here. I hope you don't mind. Um, but I've really always enjoyed that. But secondarily, I really love the underwriting process and the dealing with investors, because if you go into the deal with sort of the internal promise that you're just going to tend carefully to your integrity and don't overpromise, but what you promise you deliver on time. And if you can't deliver it on time, you as fast as you possibly can, you get in there and say you're going to change it. Those are the things that you do to tend to your integrity, and it makes the conversations with investors go really, really well. And it's always astounded me a little bit that having those conversations with them. I mean, this past year has not been fun. We haven't been doing distributions on any of our assets this year because everything's on a variable loan, and yet everybody's okay. And they might call me a little hot, but by the time the conversation's over, they get it, and they're not worried. And I think that's the main thing. I mean, you can't promise the world, and you can't promise things you can't deliver, but you can certainly say, this is my heart and this is how I feel about this, and this is why I still believe in this asset. And I do happen to believe in all. I don't think I have a dog in my roster right now. And so these are easy conversations, but they're not easy if you're afraid of anything. And I think you only get sort of unafraid again with reps. Things just shouldn't scare you as long as you're liquid and you've got the ability to communicate. So that's my message to everybody.
I like it. I mean, that's a good message. There's a few things you said in there that I feel like really hit home for me. One is don't overpromise. This is when I do my underwriting, I always have worst case, achievable, and then best case. And I like to look at the best case because it's like, this is something that can be done.
Yeah, we all do.
But I've learned now to, when I approach investors, to give them a version of the story that's between worst case and achievable. Just so that, if it still underwrites at that point, then once you go full cycle on the deal, they'll be happy. They'll be happier with the returns that they get that were 100% expected.
Yeah. 100%. No, that's because this is a long game. I mean, people don't generally get into this because of just for one investment. I mean, and it's important that the people that you get in your corral with you understand that it's a long game, because what you hope to be able to achieve is we try to get a 1.7 equity multiple over the long run for our investors, and that's a 3 to 5 year hold. We do that, and in fact, I only get excited about an underwriting project if I really think it's a 2, but I'm still only going to say it's a 1.7. Because maybe we'll get lucky, but the truth is no deal lands where you think it's going to land. Some are slightly better, some are slightly worse. And that's just the reality.
Yeah. Yeah. It's impossible to underwrite a deal perfectly because you don't know what's going to happen in the future, in the economy, in the local economy. There's just things that you cannot know. And that's just the case with real estate. I also like that you said, make sure you're liquid. I've gone into deals too many times without raising enough reserves, and it's a lesson that I've kicked myself enough in the past, and now I need to, something that I'm definitely putting into my deals now is make sure that you have reserves in the bank account when you raise the deal.
Well, we've done it. I think everybody's done it, bro. But the only way you learn is by walking through that dark place. But you can't let that happen to you repeatedly, right? I mean, so that becomes a very, very important lesson. I also can't emphasize enough how important it is. If you're a GP, I'm in a mastermind with a bunch of guys out of the Sumrock group in Dallas, and so many have gotten themselves into situations where they're GPs with people they just didn't know. And now they're in lawsuits because one GP's actually called the title company, had them change where the money was to be sent, and he reinvested in a new deal and didn't pay his partners. I mean, this is unbelievable. And how does that happen? I mean, you better know the people that you're getting into business with, and there's some of these deals have 10, 11, 12, 15 GPs. I mean, that's ridiculous. I mean, it's one of those things that's emerging because prices, shot up really quickly. At the time when also equity was starting to get a little bit more questionable, and they felt like they needed to bring in more GPs who could find more money from other, friends and family. So it's just a bad deal. Find 2 or 3 guys that you want to do deals with and just keep doing them with those guys, because trust comes over the long run. Uh, you just can't substitute that.
Time. Yep.
Yeah.
Yeah, time works in partnerships as well. The longer you know somebody, the longer you understand how they work, the better you guys work together. So love to hear that. We have gone through our time, but before we move on, I want to ask
Okay,
you.
sorry.
I know it goes by quick and on
I
this
know it does.
show. Before we move on, I do want to ask what your crystal ball says. We're in a time interest rates right now are, I don't know, 7-8%, something like that.
Yeah.
So what do you see for the next 1 to 2 years in terms of the economy and the interest rates, and what's going to happen?
Well, I'll tell you what, I'm gonna say that if the Fed doesn't raise rates in December meeting, like they're gonna kind of thinking may be looking that way as a result of yesterday's CPI readings. We're going to be embarking on about a 2-quarter period where it's going to be the best time in the world to get into a deal. Here's why. Pricing has not fallen, right, the way everybody thought it would.
Yeah, frustratingly so.
But it has fallen 10, 15%, even a little bit more in some markets. And if you can get a deal under contract that will benefit from that minute that we're in right now and close it in that next, within the quarter, then you'll see so much money flow in that will make prices rise. It'll not only that, there's 2 things that'll make prices rise. One, rates will fall. And it may be a year, but the latest thinking is about 94 basis points of a drop between now and December. Sorry, the first of the year 25, and that's new as of yesterday. And then also once they see the end of the rate rise, all the retail investors that are holding their $100,000 buckets of money are going to jump back in. Of course, many larger buckets of money too, but I access those folks that are $100,000 investors quite all the time, and those are the people that are sort of afraid and they're just holding out and they're not doing anything with their money. The minute that becomes change, if there's a pivot, everybody's going to jump in at the same time. So both of those things are going to cause the following year, 26, 25, and 26, to be really opportunities where you can get in and out quickly if you so choose. But it's going to be the steepest part of the curve for the next 5 years, in my opinion. So that's my crystal ball.
All right, sounds good. I like the version, and hopefully that's what happens.
All right.
So that does end up the first section, and it's time to jump into the quick question round. Are you ready?
Sure, you bet.
Let's do it. It starts with books or just any form of education. Could be YouTube channels, documentaries, whatever. I need 2 recommendations, one for general life wisdom and then one for real estate.
Okay, let me do the general life wisdom. I'd say it's probably the book that's said the most on this show, but it's
Rich Dad Poor Dad.
Rich Dad Poor Rich, yeah. Rich Dad, Poor Dad. And then with respect to the real estate stuff, I really like Kenny McElroy's books, the ABCs of, I don't know, investing,
Yep.
real estate. They're just a great series they're not long, they're easy to get through, they're easy to reference. So those are my favorites. Did I get that right? Is that it?
Yeah, I think that's what it is. I haven't read them myself, but they've been said on this podcast before. Yeah. Good recommendations. Rich Dad Poor Dad, always a classic. Gives you a good overview of kind of why real estate is so important. So as an investment vehicle. So that moves us on to the next question. This is for your younger self. So let's go back to the Randy way back in the 80s when he was first getting started in real estate. Go back to him, look him in the eye, give him one piece of advice moving forward.
Don't get out of this business. That's it. Stay the course.
That kind of echoes what a lot of people have said on this podcast is they wish they got started earlier. So if you're out there and you're listening and you're just thinking about getting started in real estate, do it now. Go get it. Go get a deal. Get it done, and then
Yep.
keep
And you'll
moving
never
forward.
leave. Stay the course.
There you go. All right, next question is about the US. It's a big place, a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
Well, I got three metros that I'm currently in and love. Actually four, but I'm going to say three. Um, the Dallas market, the Nashville market, and the Atlanta market. We are in the Huntsville market, and I love it, but I think it's going to be a minute before it's ripe again because of the building right there. So um, the other markets we're looking at really important are two North Carolina markets, Raleigh and Charlotte, and South Carolina, Greenville. We think all that is fabulous over the next decade.
Perfect. All right, next question is about finding the deal. It all starts with getting in contact with the seller and generating those leads. So, what's your favorite way to get new deals?
Oh, we work really hard to cultivate relationships with brokers in the markets we want to be in. We try to know all the top players at the top firms and have a first name relationship with them. And it's important because I don't work hard at chasing off quote unquote off market deals. Um, First of all, there's no such thing, in my opinion, having been a broker all these years. They say they're not on market, but it simply means that the seller is unwilling to sign a listing agreement that promises a fee. And so it allows the seller to not really have to sell. If he's signed a listing agreement and the broker delivers a ready, willing, and able buyer at a price that's been previously talked about, then the seller is obligated to pay a fee, and that is it's a starting point of commitment that I always like to be present when I'm a buyer because I don't want them to be able to walk away and not sell.
There you go. Yeah, brokers are a great way to find good deals, and that all starts with relationships. So, love that. I'm going to move us to the second to last question. This is about lessons learned. Not every deal goes the way that we expect it to, but in those deals are the gems of lessons that kind of help us in our future careers. So, give me one single deal that kind of went sideways, kind of went a way that you did not expect, and then what was the biggest lesson you learned from that?
Boy, oh geez, Jenny, help me with this. What's the deal that went sort of sideways? Um, I haven't lost money on a deal yet. But
Yeah,
I
it
would,
doesn't have to be a losing deal, but just something you
oh,
bought it, something happened that wasn't expected, and then what was the lesson that you took from it?
okay. All right. So I want to tell this story because it was such a cool thing. Was we bought this deal. It had been on the market forever. It was a medium-sized property in the Midtown area of Nashville, which is now sort of becoming this boom town. But in 2018, it wasn't quite yet recognized as such. This built 1960 building that was just driven to absolute terrible state, and that's why it had been on the market all this long time. And we put it under contract, and then before we had to close, we actually made a deal with a global Airbnb operator out on the West Coast. Signed a 10-year lease with them,
Oh, wow.
renovated it to their specifications, and sold it in just over a year and tripled our equity. So
Right.
it was a fun deal, and it was a great lesson for thinking about the ending before you even really have to begin, and we did that really well. So
Yeah. That's a strategy I've actually never heard of is getting it's almost like a triple net deal where you get a tenant in place and then sell the
that's
term.
right. It really was. Airbnb in Nashville is not unlike Seattle, I'm sure, in that there's a lot of energy around it. And so all of the folks that are in that space globally are looking for properties to own in Nashville, and they wanted to take a whole building over, and we did it for them and put a lease on it and sold it to another investor. So
Yeah, that's smart. I like it. All right, that leads us to the very last question. This is for the listeners. I'm sure people want to reach out, get in contact with you. What is the best way for them to do that?
Randy at randyholland.com. Alternatively, you can reach me at rholland at urbanequities.net. But they both take you to me, and would love to chat anytime about all things multifamily.
Perfect. I will put that in the show notes. So if y'all want to reach out to Randy, just click the little more in the description. It'll pull down the full description. In there, you can find his links, randyholland.com with 2 L's and those emails. All right, Randy, that wraps it up. Thank you very much for hopping on the show.
Gabe, thank you for having me. Look forward to the next time.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. If you guys want to support the show, all we ask, give us a like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.